Hello, it is Monday, the 11th of August, 2008. This is Brian Shannon from Alpha Trends, and the market closed with more strength again today. We saw the S&P 500, the spiders that is, gain $1.31, and that was good for 1% as it got back above that declining 50-day moving average. On Friday, we saw that it was able to push past that 129 level, and thus paving the way for the strength that we're seeing in here. So on the hourly time frame, we see that this level of resistance was taken out. Now it's going to be important for the market to continue to hold above that, and I think getting back below 128.5 to 129 could be a problem for this market, so you want to be aware of that. And of course, this trend line, it has the possibility of offering support on any pullback as well. But for now, there's nothing here to suggest that this trend is slowing down. It did break that trend line also that we saw on Friday, and the 50-day moving average here as well today. So a lot of people are saying, well, it's coming on light volume, and it's true that the volume is light in here relative to what we saw on the decline, where we saw this huge volume coming into the market. What you want to do is you want to see the market advancing on steady, heavier volume as well, but we're not seeing that. So all that means is, again, only price pays, but that's just a little clue, the diminished volume, that maybe the buyers don't have a lot of conviction here, thus making it more likely that it is in a position to turn around. But again, if you're up 1% today, it doesn't matter whether it was on heavy volume or light volume. Up 1% is up 1%. This very short term, 129 and a quarter probably is the level, and we saw here that a little bit of a sell-off later in the day, but from a 1 minute standpoint, it was able to hold above the daily VWAP. We come back above it for the close. So we continue to see some impressive strength in the short term. There's a lot of reasons to still be concerned, but nothing here price-wise suggests that it's time to do any short selling or to cover any, get out of some of the long positions you might have been riding up here during this rally. We've also got that 129 level is, as we've seen, a 38.2% retracement of the move from this high here to this low. Here's the 38.2% level, 50%, and then 61.8. Those are Fibonacci numbers. A lot of people look at them. They tend to be more of a self-fulfilling prophecy than anything. You don't want to put too much weight into them. They're just another small piece of this very complicated puzzle that we call the stock market. So impressive strength again. So if it can hold above 129, then you've got to short term give the benefit of the doubt to the buyers, but have a cast an eye of suspicion on it, because it's because we've got a declining 50-day moving average, and these rallies typically don't hold. Someone asked me, Microsoft, I've got some puts and so much for guilty till proven innocent. What you have to do is you have to look at the market on a longer term time frame to identify your candidates. Come up with your risk reward on an intermediate term time frame, and when it starts to reverse like Microsoft did here, there's no reason to continue to hold puts down 90%, as this person told me. You have to listen and be adaptive to what the market continually tells you, and it tells a lot of conflicting signals. Let's just get rid of those lines. As far as USO, USO was up 5 cents today. It was lower than where it opened, which is why we have a red candle, but still kind of trying to find maybe a little bit of support near that 30-week moving average, and still no sign of a bottom here on the daily time frame. When we drill down to shorter term time frames like the 10-minute, we've still got the declining 5-day moving average, and we've still got this pattern of lower highs and lower lows. So maybe getting back above 94 and a half or so, we might see a little bit of a short squeeze rally. I think the shorts are getting a little complacent in here, in a rally, probably due for a little bit of a rally, but nothing in here suggesting that one is going to come. Trying to pick a bottom, such as in gold. Gold broke down even further today, so gold looks like it's got some problems, and I would stay away from that group as well. The Russell 2000 up $1.73 or 2.3% here today. Friday we saw it got back above the 200-day moving average. Friday we added those gains, and here we saw some big volume. So the only thing that pays is price, and that's what you've got to trust. This level here has the potential for the resistance in this market, and on a weekly time frame, it's that's a much bigger level near that 75 to 76 level. Getting above and closing above there on a weekly time frame, I think, might change the overall psychology of people who are investing in these mid caps. But we have come pretty far, pretty fast, for coming nearly 10 points on this index, or about 13, 14% over just the last month or so. So it is getting a little extended up in here, but clearly it broke past that 72.5 level on Friday, and it holds very nicely above there. That's going to be the key level going forward, is 72.5. If the market can continue to hold above that, there's really nothing here that suggests the sellers are coming back into this group at all. In fact, it just seems to be strengthening further. It's getting a little bit extended, so probably due for a pullback. Initially, I would look for maybe the 5-day moving average to catch up to it, or maybe the market comes down and meets that 5-day moving average. But the IWM, as I said Friday, it looked like higher prices were on the way. Buyers were in control, and you should be looking at it as cautiously optimistic in here. Very good day for the IWM, and the Nasdaq 100 was up about 0.9%. It also got above its 200-day moving average. The key there, as we know, last week was getting above that $46.15 level, which it did last Wednesday. It consolidated under that declining 50-day moving average. I think probably sucked in some short sellers. Friday we saw continued strength, and more so even today. What I had put on the blog earlier in the day was that it was coming up to this level here, which was the 48 level is important for a few reasons. It's these lows back here from back in May, and then early and mid-May, and that's where it broke down. So that 48 level was important for that reason. It's the 2/3 retracement level as well, and it's also the highs right in here at about 48. Intraday, we saw some significance near that level as well, as it ran right up to that daily R2. It pulled back to the 2-day VWAP, but on a 1-minute time frame, you can see the sellers were a little bit more aggressive in this market than they were in other markets, but still, it's the important level of support that this market needs to hold above is $46. As long as it holds above $46, short term, give the benefit of the doubt to the buyers. Or rather intermediate term, I guess. But we saw the breakout past that resistance level. We saw the test twice last week, and then the market broke past there. Maybe a little bit of support on a pullback near 47.20 or so, but nothing in here suggests that the high has been made. There's nothing, there's no series of lower highs and lower lows. What we have is higher highs and higher lows. This little level will probably be important tomorrow. We've got an advancing 5-day moving average. So this, the market continues to act good in the short term, but the bigger picture is still very mixed. So you want to still just be very quick to take your profits. By the way, I'm trying a new site to upload this video to. It's super high quality, and you can find the link on my blog. If you're looking at it at YouTube, the YouTube video is very fuzzy, and you'll find the link for a much higher quality video at alphatrends.net.